Hello and welcome to another episode of Front Row. Joining me is Mr Murtaza Jafferjee. He is the CEO of JB Securities Limited. Thank you so much, Murtaza, for joining us today. We'll start off with you working in the capital market and being a part of the Colombo Stock Exchange as a director. You're very involved in the domestic capital market. It has not been performing at its best in the last few years, unfortunately. What can be realistically done to improve this, namely to improve the depth and the liquidity in the market?
Okay. So if you look back, the core reason why the equity market is not performing well is that other alternate forms of investment have had a more attractive rate of return. So by far, if you take the higher net worth households, the killer asset class has been real estate. So if you take the index of Colombo district land prices over the last 9 years, it's up 300%. That's a difficult metric to compete with. Then if you look where majority of households keep their money, which has been with the banking sector or finance companies, they have been yielding 10 to 11% nominal interest rates, in some cases even higher. So the equities as an asset class has found it extremely difficult trying to keep up with these other alternatives, which are more familiar to more households. Equities are far more complex asset class, and you need to be a far better informed investor. So since demand has been slack, that is the key reasons why equities have been underperforming. Now, what's happening is that with inflation coming down, nominal interest rates and the central bank also taking some very active measures in trying to drive down interest rates, bank deposits are now yielding single digit, and probably from 1st October they will come down. So at the margin, a household that purely looked at a relatively low risk alternative now will probably have to seek a little bit more risk to get a higher rate of return, and equities increasingly as an asset class is looking more interesting. Real estate that has done extremely well is also having a lot of stress because the stress level in the banking sector is increasing, and about 40 to 50% of the underlying collateral under which most bank loans are made are property. So when NPLs are increasing and banks may need to foreclose in future, supply will exceed demand, and therefore for the first time after a very long time you might see real estate prices coming down. So in the context of the two alternate investments, equities increasingly, because the prices have come down, will probably have better expectations of future growth. And therefore you will see the domestic household looking increasingly to invest in equities. And ourselves being in a business, we see that the level of inquiries are slowly increasing. As far as the depth and breadth of the market is concerned, the biggest issue that we have is the free float of companies are very low. So if you take 2 to 3 companies like John Keel's, commercial banks, some of the larger companies, they have adequately large free floats that range between $500 million to $1 billion at the very high. But most countries, most counters, the liquidity is in the range of $10 to $20 million, the entire public float, which is a very small quantity. So, liquidity begets liquidity, and the lack of it does not attract certain types of investors, especially the foreign investors. So, to me, the recipe of developing this market is actually to try to get larger size entities to list themselves. And also better prices hopefully will encourage some of these controlling shareholders to sell down a little bit, improving the liquidity. So two sides. So from the investment side, the lack of all the alternatives not being so attractive will probably bring households into the market. And on the supply side, that better prices will encourage existing controlling shareholders to sell down a little bit more, creating more supply. And hopefully we can attract new listings and hopefully larger listings, creating more choice for investors.
But you've been in the industry for long, and your in-depth knowledge about the industry and what you've just explained. Do you see a pattern over the years? You probably would have seen this kind of equity market dipping before.
So I've been in the industry now close to about 27 years. And I always say that bull markets have 7 to 8 year cycles. So one is due. The last one was around about 2011 at the end of the war, and we had a phenomenal, once in a lifetime or once in a generation bull market. Ever since that, the returns have been poor, and there has all the crises that the economy has faced has significantly affected investor confidence. So invariably, markets do go through cycles. Now, developed markets probably would go through 3 to 4 year bull and bear market cycles, but Sri Lanka, it has been more prolonged. So I think a bull market is due, and the definition of a bull market is something like a 20% increase in prices. So technically, a bull market has already started, because post-Easter bombing, the market went down about 19 to 20% from the start of it has recovered most of those losses. So technically, we are in an upward trajectory.
Well, thank you for sharing those thoughts. Sri Lanka is placed precariously in terms of its debt and refinancing situation. What initiatives will reassure investors and help reduce the burden on the government?
Okay, so to me, the first initiative is we have a mother of all problems. So the total debt is about 10 to 11 trillion rupees, which is about 82% of GDP. And the SOEs are carrying about another between 500 to 700 billion on net debt. So we have a monstrous problem of about 85% of GDP. Typically, a developing market access country, the red line is about 60%. And if you take some of our debt, which is concessional, and adjust for today market rates, maybe the debt may not be as high as 85%, you could shave another 5%. But we are already in very dangerous territory. So the first thing is that we need a focused and centralized team to look at the issue of debt management. Now, the issue that we have in this country is the loans are handled by the Treasury, the market securities or debt securities are handled by the Public Debt Department of the Central Bank, and the guarantees are handled by the External Relations Department. So we need a unified team that has all the obligations and liabilities of the government in one central place. The second issue is that the timing of when these things come due also matters, because the issue in debt rollover is you don't want to have bunching. You don't want to have a lot of debts coming due at the same time. So you need somebody to clearly understand the different maturities and focus full time on this job. And you need specialists. The second part of the question is messaging. So you have to convince the markets that you are going to be able to pay. So very few countries ever pay back their debt. It's a matter of rolling it over. It's about convincing your creditors that you will be able to pay me back in future. So the messaging is very important. And the third thing we have to do is we will never be able to pay this debt, but we have to grow out of the debt, which means that the economy has to grow faster than your debt, which is not happening in the last two. So the third issue that we have to do going into 2020 is we have to get our act together and accelerate economic growth to at least 5-6% so that the real growth exceeds the real growth in our debt.
Well, thank you very much for that. I just finally want to take you into education reforms. So education reforms has been talked about at many forums, as you would have heard many times. As a private sector leader, what are some of the top reforms that need to take place so that Sri Lanka is able to have a globally competitive workforce so that we could leapfrog economic growth, as we say?
So the issue is, one is how much you're spending on education and the outcome from education. So one obvious issue is that can you spend more money, right? Considering that we are so indebted and the fact that our taxation to GDP is so low, the amount of fiscal headroom that we have to spend unless we spend less on some other item, and because interest is taking almost 30% of what we are spending, we don't really have a lot of wiggle room. So what, the outcome, what can you do to improve outcome? So one suggestion that is being made through the chamber is to transfer from a model where the education provider is funded to a model where there is an endowment provided to the student, right? So think about it, that you have the choice of going to 3 places to eat and somebody pays them to feed you, as opposed to you being given the money and you going to your choice of restaurant and deciding what you want to order. I'm sure that the second alternative will probably get you a better outcome. And the one suggestion is that to transfer the funds to the student, so that the student decides the institution they want to attend and they decide what subjects they want to do or what specialization they want to do. So you might have a price for a particular degree and your endowment may be lower than that. But you have the ability then to top up and do what you want to do. So under the current system, depending on your A-level marks, you are allocated to a particular discipline and a particular institution. That may be not what you want to do, but because that's how the basis of allocation is. So to me, this is a game changer. And the second part is that if this endowment is given, the provider doesn't necessarily have to be a state provider. It could be a private institution. So you bring in that model, it certainly can accelerate the access to education. The final point I'd like to make about education is education about passing exams or the ability to learn new things. Now, if I think about myself, in my early 20s, I did many degrees. But when I consider what I'm doing now, it has nothing to do with what I studied. So the essence of it is that we have to skill our people in the ability to learn new things. And that will make us a very competitive economy.
Murtaza, thank you for sharing your thoughts on much debated and much needed education reforms, and thank you for joining us on Front Row.
Thank you, Sanjeevani.